Hello and welcome again to Stocks Advisor channel. In today's episode, we will talk about Microvision Incorporated, traded at Nasdaq, ticker name MVIS. Well, MVIS today is showing really incredible move. It's starting from 650 opening with a jump and then now trading 957, still intraday, still 7 minutes to go before the closure of the trading sessions of today. But I don't think the candle will change too much, maybe a small upwards shadow will appear, but it won't change anything here in our analysis. So how to play? Is it still wise to play? Because if you look the price action starting from beginning of November, from 150 went all the way to 957, so it's really like more than 4 times, more than actually 6 times growth in this case. And of course the question is it not too risky to play? Shall we avoid it or not? Well, here it's clear that momentum is extremely bullish, although looks like the steam is slightly running out, but still some volatility can be played here, and we can do some let's say entries on volatilities and making for kind of U-shaped formations, similarly to what we saw in the middle of July here from this height and coming back with forming this U-shape, especially when the moving average 20, the green line, did reach the price action. And as always, here at our daily chart, we have three moving averages depicted. Is that moving averages 20, 50, and 200 being green, blue, and red lines correspondingly. So why is it important to wait for this situation, to wait until moving average will be 20, this green line will be in vicinity? Because this usually creates additional bullish momentum. And although the current momentum is very bullish, but it's a bullish momentum with a lot of volume traded, so its statistics is a little bit skewed towards, let's say, looking more bullish than it is, in a sense I will explain now, in a sense that we have a very high volume traded today. I'm not even saying to comparing to standard volume, but also comparing to this elevated volume, it's almost 3 times higher. And of course, when you look at moving averages behavior, these three lines, indeed, they're extremely accelerative, especially in the end part here. But and of course, their second derivatives are much higher than 0, and all three are going like this. So this means that they are going with acceleration, but these final parts, and this is important to note, so these final parts that are talking about acceleration here, they are also caused by this huge volume. So it's, let's say, less accelerative than it looks like. And therefore, what could be observed here, also given the fact that RSI-wise we are very, very high, very strongly overbought. It's 95.32. It's very high. It's, I think, one of the highest RSIs I ever saw. It's very high RSI. Also, if you look MACD-wise, histogram, after having one second shape, it's starting next wave incredibly high. So most probably it will start breaking it down here, causing some correction of the price, but also RSI-wise, we need to a little bit return, little bit, let's say, de-steam. So what could happen tomorrow? Because still this candle is shadowless, although started with a jump. And since it's a shadowless candle, we still might have, let's say, an upper jump. We might have either a shooting star or kind of a gravestone formation. So it could be a candle looking like we saw here, for example, with a jump and then showing downwards. So it could be a candle like this, so upwards red candle. So both combinations are possible, but it should be some decelerative indication. Speaking of some correction to start, because we are already too high, not only speaking of November, but also speaking of the moment from mid of December when the current price started to grow. So from the level of just below, just about 270. So we are already too high 3 times, more than 3 times. So we need a little bit this steam. So we need a step, at least in the waves, a step like we saw, for example, in the area of 4.0, and the step as we saw in the area of between 5.5. So we need another one here. And after this jump, we might form it. But because this candle is very high, this step could be also quite high. So we need to be prepared for volatility. Volatility here could be quite deep, but we'll be trying to prepare for all situations. And of course, at the moment when moving average 20, this line will come up here, most probably with the bending. We should have one more, let's say, rebounds, and then some major correction, of course, should start. And with that sense, you don't need to be greedy once you are in the position. If you have reasonable enough 10%, it's enough, just exit, because otherwise, if you stay too long, it could be very tricky to play here because of very high volatility expected. So how to play, what to do? First of all, it's advised to wait until the previous leg or until the low of current level. So I would say anywhere between this jump we saw today, this would be the first, let's say, two volatility levels where you can start entering for a quick play. And again, immediately for entire video, this is a quick play assessment. So once you have 10%, just exit. Don't be too much. Everything over is really risky. So these two volatility points, V1, V2, would be the first entry for a quick play. And should the price decline further, of course, we need to be prepared. And the most reasonable volatility level here is in this vicinity. It's just below 4.5. This would be the volatility level V3. And then between V3 and actually another one, which is just below 4 here, this would be V4. So this would be our second entry position for average down if decline starts. And then we are in more safe situation, because then real support line starts. So if the price, but of course not given at all, just as we always do discuss it, if the price really goes strongly down, we need to be prepared for real support levels, and then we have those here. This is really historically almost half year ago proved many times support level, a little bit balancing here, but we can draw it even higher. Starts on this level actually. So between this line and this level, these are two very nice support levels to play with. And then this would be S1, S2. Another entry position. And because this is extremely volatile, and we are speaking of not even percentages, but times volatility, like 3 times, 4 times, 6 times volatility, depending on where you start to count, we advise here over precautious, over safe approach. Will be 6 portions play, and therefore it's advised to keep funds for very low average down opportunities, just in case, as always, because we don't want to be trading with any possible loss. So there would be the final support level at this area where you can average down finally, and this would be S3, S4. And then again, not at all expected to go there, but just to keep it in mind. And here it would be advised to play with 6 portions. So if here you buy with 1 portion, then you average down again with 1 portion. And then if needed, you average down 2 times with 2 portions. So all funds you would like to play here, you can split in 3. Then you buy with 1, 1, 2 and 2, according to entry positions discussed here. This way it would be more, let's say, loss versus profit optimization. So we will be optimizing more to defend versus possible loss, because this is very volatile. Although not expected at all we go that low, but it's just always for these super volatility stocks, because you never know if any super negative catalysts come in, if it drops, but not expected, of course. Just it's always wise, at least what we do, our strategy, to keep some funds for very deep average downs, especially when you speak of 6 times growth beginning from November. And in that sense, it will be quite safe to play here. It might take immediately a couple of days, so maybe resolving already this week, or might take even longer if we go lower levels. And this way you will need to, let's say, stay here longer. As you see, we give advice from 1 week to several, maybe 5 weeks. So also it means that other videos at our channel are having similar, let's say, predictivity. So if you play here, as I said, don't be too greedy, 10%, very safe to exit. Better try other videos, be more consistent trader, trade many times, check other videos, other opportunities, other stocks, rather than trying to become rich from one trade, because usually that's the recipe for disaster, and usually that's never work. That's the main reason why up to 95% of traders fail in the first 3-5 years after they start trading, because they want to play casino rather than to be traders. That's very important. But okay, this is more philosophical thingy. We will discuss it later maybe, but for today, that's it. That's the story how to play with MVIS. Good luck with it. And by the way, if you don't find a stock of your interest that being discussed, you can always ask us to do it. You can find in the description to this video the link how to do it. So please check the video if you like. You can make us to make a video similar to this one with analysis of stock of your interest. With this having said, good luck and see you at another episode of Stocks Advisor channel.